Hi, I'm Bryce Norris, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Thursday, October 17th, 2013. For better or worse, the U.S. government is back in business today. Market analyst Paul Bergner joins me to go over the impact of the shutdown and other events shaping grain markets. It took a few hours for USDA offices to get up and running today, but one of the first matters of business was the official cancellation of the October production, supply, and demand reports originally due out October 11th. The next official report comes out November 8th, which should provide better information on yields and harvested acres. Still uncertain is when the agency's other complement of data, such as export sales, will be updated. Grain prices moved higher across the board today, but the rally didn't appear connected to the battles in Washington. Did the shutdown do any real harm to agriculture, Paul?
I don't think so. I do think it forced people to maybe communicate in ways that they haven't been recently, as opposed to sitting behind a screen waiting for someone to feed them information. But I don't see a real impact. If there are some real impacts, they may come as what we consider maybe a data dump occurs next week and maybe even in the week after, as more information comes out in big groups. But right now, doesn't look like it's a big thing. I think most of it's already priced into the market.
Soybeans led the way higher today, posting double-digit gains after November futures wrangled to close above its 200-day moving average on Wednesday. The basis at the Gulf strengthened, a sign of good demand, and U.S. prices are the cheapest in the market. U.S. originations from the Gulf were around $2 a bushel or more less than shipments out of Brazil to China. Export inspections data compiled from the Federal Grain Inspection Service website on Tuesday showed 47.4 million bushels of shipments, with China taking almost 29 million of that total last week. The National Oilseed Processors Association released crush data for September, showing usage down almost 10% due to tight supplies. Meal inventories remain very tight, helping drive today's rally. Anecdotal reports continue to suggest good soybean yields as harvest likely is past the halfway point. November futures look like it's trying to confirm a double bottom. How much upside do you think the market has, Paul?
I do think there is still some upside in this market if exports pick up. I do think that there is. It'll be interesting to see whether or not we pick up bushels in the November report from USDA. Are the anecdotal reports actually going to muster a change in the number there? If that occurs, we may not see the upside that we thought we were going to see just a few weeks ago. But I do think 14 is still in there, but we're going to have to hurry to get there. I think the other piece that's coming down the road is what is projecting to be a record South American crop coming in this winter. So we're not going to have an awful lot of room to push ourselves up into that 14 range.
Well, farmers mostly focused on soybeans in the first half of October, but are starting to turn their attention to corn. Hedge pressure so far appeared rather limited, with most of what was cut so far fulfilling early contracts are going right into the bin. December futures made new 3-year lows on Monday, but rallied above the trend line drawn off August to October highs, though gains appeared to stall out today. China appeared to be a big buyer again this week, boosting its purchases in October to close to 50 million bushels, helping the market hold for now. Still, yields appear to be good in many places, increasing potential for the crop to come in at 13.8 billion bushels or more, helping ending stocks more than double. Even though the government was closed, leakers were still hard at work. One document that got out was a proposal by the EPA to cut its renewable fuel standard mandate for fuel ethanol in 2014 and 2015. The plan likely faces plenty of lawsuits and opposition in Congress, but could be another blow to rebuilding corn demand. Paul, prices for corn are trying to hold, but what are the prospects for lower lows down the road?
Bryce, I still see some lower lows on the radar. my number at 4.25 is still out there. I do think that we've still got some room to go on the downside. Could possibly be when that USDA report comes out in November, if it's not as maybe as bullish as we were hoping for. So I do see some lower lows still coming. The other side of that equation is potential for a smaller South American crop this year that could help us after the first of the year. But right now, it's real tough to find a place where we're excited about making corn sales in the short term.
Wheat demand has started to fade a bit following the usual trend after the flush of harvest supplies hit the pipeline. Kansas City futures sold off sharply on Wednesday, hurt by active seeding of hard red winter wheat on the plains. There's plenty of uncertainty about production elsewhere around the world, with some talk this week about dry conditions in China, which was already a big buyer of U.S. soft red winter wheat this summer after rain hurt its 2013 harvest. Elsewhere, however, prospects appear to be improving a little. Argentina picked up some more rain this week. Storms could help Australia over the coming week as well. Drier conditions in Ukraine and southern Russia also could be cutting earlier estimates of lower planted acreage out of the Black Sea after a wet fall there delayed seedings. U.S. prices have traded in a narrow consolidation range over the past 3 weeks. Which way do you think this market is headed out of that range, Paul? Higher or lower?
You know, my bet right now is on lower once we come out of this range. It looks to me like there's enough good news in the rest of the world in terms of production to push us a little lower till we get a feel for what's going to come out of there. The other piece that's going to be a challenge is keeping exports up at this pace. We're starting to see those shipment numbers slide down. We dropped down to 25 million this week. We're starting to bump those down a little, and I think keeping that export sales number at the pace that it's been at is going to be a real challenge. And there's no feed demand out there to pick up any slack. With corn under 450, we're really challenging ourselves to try and push any wheat into that feed side. So it looks to me like if there's opportunities, they're going to be well down the road, and I think lower coming out of this this range that we're in right now.
Well, thanks, Paul. We'll be back next week with an updated look at crop progress and exports on another edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you out.